Welcome, dear traders. You're watching a recap of the Asian session. After mixed signals from Wall Street, Asian stock indexes also traded without a clear-cut trend yesterday. On a Thursday morning, Australian and Chinese stocks rose slightly. Japanese shares kept growing, hitting a 6-month high. Only the United States and the New Zealand stock indexes incurred losses in the Asian session. After Jerome Powell's testimony to Congress, many traders remain cautious. It's rather curious why they were so shocked by Powell's comments. They did not differ significantly from what he said earlier. It appears that investors were extremely optimistic about opposing a monetary tightening. However, when this scenario did not come true, they panicked. And this is why there was such a big sell-off on Wall Street. Now markets are gripped by uncertainty. The Fed chair cautions that interest rates are likely to head higher than the policymakers had expected. And we will stay the course until the job is done, he noted. It means that the watchdog will remain committed to tightening until inflation runs steadily at the 2% target. However, Jerome Powell pointed out that further course of monetary policy would also depend on incoming economic data. Given that the Fed primarily focuses on inflation and labor market reports, it definitely took notice of job openings in the ADP data. The latest ADP and the JOLTS reports signaled that the labor market remains tight. Now, investors are awaiting non-farm payroll data with bated breath. Non-farm payrolls are on tap tomorrow, and they are sure to impact the Fed's key rate decision. The meeting will be held on March 21 and 22. Traders are now revising the forecast on the pace of a tightening, and the yields on the US government bonds declined again. The US dollar dipped as well. In the morning, it dropped to 105.60 versus its rivals. Nevertheless, the greenback is likely to resume upward movement thanks to the Fed's hawkish rhetoric. In the Asian trade, the US dollar index was trading near a 3-month high. Currently, analysts expect the central bank to hike the key rate by 50 basis points in March. Given the expectations of a strong non-farm payrolls data, the US dollar is consolidating in the wide range of 105.50 and 105.70. Something extraordinary is happening in the Japanese markets. Usually, stocks and the yen have a different dynamic, reflecting demand for either shares or fiat money. However, the Japanese stock market has approached a 6-month high. The yen is also rising against the US dollar. The Nikkei has been climbing for 5 days. At the same time, shares of real estate and financial companies, which usually move in opposite directions, have also been growing. The fact is that the fiscal year in Japan ends this month, and this is why investors are rushing to acquire stocks of companies with high dividends. In addition, the Bank of Japan will conclude Governor Haruhiko Kuroda's final meeting on Friday before his retirement in April. In order to cushion themselves against unpleasant surprises, some investors preferred to lock in profits in advance. Ahead of the Bank of Japan meeting, the yen is also gaining momentum, although the regulator is likely to keep its ultra-loose monetary policy unchanged. Such stability against the overall market uncertainty has its advantage. Besides, Japanese companies that make profits in dollars seek to convert them into the national currency by the end of the fiscal year. Such an Influx of a capital also significantly bolsters the yen versus the US dollar, and the dollar-yen pair dropped to 136.70 in the Asian session at West trading and in the bearish channel of 136.50 and 137.40. The AUD-USD pair tried to consolidate about the psychologically important level of 0.66. Although risk appetite may decrease at any moment, it's now boosting the Aussie. In the Asian session, the pair was moving in the bullish channel of 0.6577 and 0.6620. After Reserve Bank of Australia Governor Philip Lowe admitted the possibility of a pause in the tightening cycle, the Aussie's upside potential is limited. However, it advanced following the news from China. The country unveiled upbeat inflation data. The Chinese economy is now trying to facilitate domestic demand. For Australia, this news is crucial as China remains its main trading partner. However, all these bullish factors may be overshadowed by the fresh US macro stats, especially the non-farm payrolls report. Until the release of this report, the Aussie is likely to advance higher. On a Thursday morning, it touched 0.6613, gradually rising. The New Zealand dollar has already experienced a drastic decline today. It rolled back below 0.61. However, the Kiwi managed to recover slightly amid the consolidation of the US dollar and the news from China. By the end of the Asian session, the Kiwi dollar was already trading at 0.6117. However, despite today's upward movement in the range of 0.6098 and 0.6133, the overall trend is bearish, so the Kiwi is currently trying to offset its early losses. And this week has been a quiet event for traders. However, usually there are lots of great trading opportunities during such periods. Hit the subscribe button and keep close tabs on the market developments with us. See you soon!